I got a new world in my view. Lord, my journey I pursue. I said I'm running for the city. I got the new world in my view. I got the new world in my view. Oh, my journey I pursue. Lord, I'm running for the city. I got the new world in my view.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next man.
Good afternoon. This is Mr. Not Advice. It is Friday, March 21st, 2025. This is my end of the week summary and following week outlook. So we had a really quiet day yesterday. Oh, first of all, obviously this is for entertainment purposes only. This is not an offer to buy or sell anything, trade any stock, not investment advice in any shape or form. Never get any advice from a complete stranger off the internet. So, okay, having said that, yesterday was actually the lowest volume day, so one of the quietest days. And then today was actually the busiest day on a volume component, and that obviously was due to the quad witching today. Option expiration across 4 markets. So one of the things that I'm going to do, I do have a new scanning service that I'm going to fire up because this morning it appears as though the market is going to be very, very tuned in on Fed speakers' comments, because this morning the Fed's Goolsbee called out strength in hard economic data, and that alone, and he also mentioned the 2 words stagflation and transitory. So that's what spooked stocks in the pre-open. Okay. And that's the first pre-open is the first tranche of option expiration goes off. And then he also suggested it would take longer to make their next rate decision. Okay. So market didn't like that. Makes sense. Then another speaker comes out, Fed Williams, and he says current policy stance is appropriate, but risks to employment and inflation have both risen. Well, that's not dovish, that's hawkish. So that didn't help either. Then additionally, so that was the morning open. So then we'll get to what happened throughout the day. The week data this week, somewhat soft data, pushed the as you can see here, we're down to FOMC says we're going to get 2 cuts this year. And the market believes now we're going to get 3. And I don't know yet, because I don't know what the probability, I don't even know what the policies are that have what I need to consider for high probability to be able to make that guess. So big day coming up, April 2nd. He constantly mentions this date. And that's what turned the market today. He's calling it Liberation Day, and that's the day that all tariffs go into enforced. But what he said today was there will be flexibility on tariffs. And then he also added whatever they do to us, we will do to them. And then there was a final comment about China. He was asked if China can do anything to head off the trade war, and he said, we can talk. And that was enough to start pushing the market higher. Both the Dow and the Russell ended up the week in the green, and Nasdaq broke even. S&P finished in the green at the very end of the day. Mag 7 stocks down again, 7th in the last 8 weeks. So this is the 7th week we're down in Mag 7. But we did see strength in Tesla today. I listened to the Tesla thing last night, or Elon gave a company-wide held a company-wide presentation / call, and I was very encouraged by it. I think he did a good job. All you need to do is to get out there, remind investors why they're invested, stop the bleeding, and you could get a nice little rally in Tesla now. It just depends. I know that there's additional global events. Let's call them events. No, let's call them what I think they are. There's global vandalism and I'm not going to call it terrorism, but global vandalism and destruction, certainly against Tesla companies. I think it's going to be March 30th is the date that they're planning. I'll double check that. But anyway, Tesla certainly helped today. But yeah, with the end of the day spike, I was interesting to see, and I'll get to our individual positions, that NVIDIA did participate. It never turned green though. So looking at a couple things that I'm watching the dollar. The dollar is broke above its 200-day moving average, but look at this area right here, this break level. So I am watching the dollar index. I'll spend this weekend trying to figure out how I want to trade it. Bitcoin ended up, by the way, unchanged for the week. And right now that 80,000 level right down here is going to be supportive. Let's take a look here. Yeah, Bitcoin continues to cling to its 200-day moving average. This is if you've heard about this, this is the correlation that has existed. Let's see, this goes back to 2023. And the correlation is that Bitcoin moves, Bitcoin follows global M2. Okay. So the green is global M2 and blue is Bitcoin. So when you hear about, well, Bitcoin's going to move up as a global M2, this is what they're talking about. Do I think that correlation is going to continue? Yeah. And until correlation is broken, then the assumption is that it will continue, right? So sort of physics, right? Unless it's acted upon by an outside force. Okay. So that's what one of the bullish cases in the near term is for Bitcoin. And it's a 3-month lead time, by the way. So gold today was like what the golden gas is monkey hammered. It was monkey hammered today, but that was because of the comments from the two Fed speakers early in the morning, right? Hawkish. So despite that, it still ended up closing above 3,000. And it is up how many? Let's see. I'm trying to see how many weeks it's been up. 11 of the last 12 weeks. So, and it did end this week higher too. So gold continues to move. Looking at this was interesting to me. So this is the Mag 7. So this is prime book. So this is what they call top of the book for institutions. Okay. Meaning, well, it's exactly as it sounds. What's interesting is look at the Mag 7 exposure. That's going to be your blue line. The Mag 7 exposure has just collapsed. It's almost been cut in half. So here's my point. If there's going to be a rally, and I've been saying if there's going to be one, I think it's going to be in the SPX, not in the Qs. This is why they've taken so much money out. I do not think with them being 20% off their highs on average, or at least they were before today, that there is enough appetite to rush back in with the type of unsettled economic picture we have. So any bump, I think, is going to be temporary, is my point. But I found that interesting. Just when you look for a market and what type of fuel it has to move, this is one of the things you look for. For example, I'm looking at this chart. I'm looking at copper right now. If you know of an interesting way to get long copper, love to know it. And let me make sure I went over everything, and then we're going to go into great. Let me go over into some specific positions as well as specific charts that I am paying attention to. Okay, so here's the easy thing to do right now. Okay, on the SPY or the SPX, either one. Okay, on the SPY or the SPX, put a 200-day moving average. Why? Because that's what institutions are going to be. That's all the talk is going to be. Okay, that price is going to use this 200-day moving average as a resistance level. And they're right. Until it gets over it, it is going to act as resistance. But I've also got other significant resistance levels as we go. If there's going to be follow through, it needs to happen Monday or Tuesday. Okay, meaning if this was just not OPEX crap at the end, let me see something here. Where do we end up? 563. So we avoided max pain. Did we avoid it? Yeah. We need to break and close above this 571 as soon as possible. Okay. The longer we hang out down here, the more likely this just turns into one big, nice rollover. So on my long positions, first of all, then on the Qs, it's going to be the same thing. It's going to be the 200-day, but on the Qs, you've got the 500 above the 200-day moving average. And on the SPY, you have 600 above. So there is a lot of technical overhead resistance to prevent this market from going higher, meaning it's going to take something, a change of tone, a change of outlook. Something's going to need to happen in order for this to rally up. Okay. Do I think it's going to happen? I don't know. I think we have clear sailing. Well, as much as we can have it with the great orange one in office now, but we have clear sailing at least until April 2nd. Okay. But not really, because, as we get closer to April 2nd, we're going to have more tweets from Trump, so it is still a it is a high risk, high volatility period. So my trades will remain low as such. And yeah, I have gotten grief about it. Somebody asked me that today. Yeah, I've gotten grief. People, why aren't you trading as much? Well, that's what my rules are. If I wasn't teaching students, I was commenting to one of my Fight Club members today in our one-on-one. If I wasn't teaching students, I literally, there was a time in 2008 where I literally didn't run a trade for 5 months. I mean, it was crazy. So, but I understand that's not the domain that I work in now. So anyway, my point is risk remains high right now. Okay. And that can be, and look, at the end of the day, if you really, I like to use the weekly, the argument can be made on the weekly for both directions. We effectively closed unchanged from where we closed last week. Okay. We closed last week at 560, at 562.81. We closed this week at 563.91. That tells me the market still doesn't know, right? But here's my rule. When consolidation happens within or after a downtrend, my assumption is that when the consolidation is broken, that the downtrend will continue. Same thing for an uptrend. When consolidation is open on an finishes in an uptrend, here, my belief is when it breaks, it's more likely to break to the upside. Okay. So yeah, but I'm watching this. I don't know what it's going to do on the Qs. Same exact price action, right? So is this an area of support? Absolutely. Is this supportive? I don't know yet. We're going to find out. Maybe we won't find out next week. Maybe we'll find out the following week when April 2nd comes. All right. I'm in wheat and precious metals. Have no problem with it. I'm not concerned at all. This was a nice little stick save today. Did close down 57 cents, but gold also finished lower, 1560. So, but I'm fine with it. Let's see if I look at let's look at Tesla. Yeah, this was a good day for Tesla, but let's look at this chart that, quite frankly, it's just one day and it still hasn't. This is going to be a theme, you guys and fine ladies. That price today has still not broken out of the range from now, almost 3 Mondays ago, right? So this is that big engulfing red day and it hasn't broken it yet. So a good day, but the test is coming up, 253-ish, right? Break that. And I think we're on our way. I have TLT. I've not added to it yet. I'm waiting for this break. Going to SoFi. SoFi, I don't get it. A nice strength today. I did not, my original stop was 1249. We're long the calls. It remains 1249. I have a 1240 here, but 1249. We're going to know probably Monday or Tuesday, right? Either this move up is going to break through this level and we're going to get up into here, or we're going to peter around here, or we'll fail. I think we're actually looking at today's end of the day strength. As long as the end of the day strength wasn't purely driven by OPEX, I think this, I think a lot of these price charts are going to break to the top side. I'm still watching Palantir. Palantir on the daily looks great, right? Fantastic. Until you realize this is February 27th. The price hasn't moved in a month. So I'll wait for the break, right? Breaks this, I got clear skies. So NVIDIA, interesting day today. Although it's still, here's the battle zone, right? From about here to here. It's inside of a bigger battle zone. So right now, trend is remaining up. Okay. And we're going to find out Monday too, whether we break this high or not. Looking at Groupon, I don't understand this company. I have the stop down here at 1622. I'm going to raise my stop up here. I'm going to at least put it at the midpoint. I don't want to see it close below that. I do see this rounding of the ranges. It doesn't necessarily mean to me, it doesn't always foretell that it's rolling over. What I'm watching down here is this volume increase institutionally keeps going up. I'm also watching this. Okay, so we have slowing momentum for these last 2 days. I like to drill down into the 15-minute too and see. Yeah, we had strong buying, dip at the 1 o'clock hour. Yeah, and then strong buying into the close. Nice big candle at the end. So yeah, looks strong. I would expect this. Now, who knows what the futures are going to open up with. As you can see on the daily, I'm targeting now first this level here, 1747. And then I'll be targeting up here at 1854. All right, let's go to the next one. EWG. I got to make a decision here, but I want to see how Monday opens. If we reverse in, then I'll stick with it. If we continue down, I'll watch this level and either take my loss. If we reverse, I have to decide. I know for certain if we reverse here on Monday, we'll have to see how Europe opens. If we reverse here, then I will stay with my trade. Okay. EOSE, interestingly, EOSE stuck smack dab in this. I mean, it's been stuck here forever, right? We had a tiny little bit of buying, but that was in the morning. I would assume most of this because this was Wednesday and Thursday. No, that was organic buying. Actually, I made that comment to some of my members the other day, our Discord members. So look at this gray area. This is the battle zone that we're in right now, right? So until we break one of these, there's nothing to do. I can tell you what my plan is. My plan is I'm going to add long here. Okay. I'm going to short the crap out of it here. Okay. That has nothing to do with what the outlook is that I have for the company. Nothing whatsoever. Okay. So that's as of today, what I know today, right? ENVX, same thing. I mean, this thing is stuck in this range from here to here, right here. And you got a point of control above. If you turn your head right, you can see these volume spikes. And that's where the most volume was done in this past year. So it's got a lot of supply it's got to eat through first. Now, this is encouraging. It's we've got some buy momentum coming into the stock. Okay. On the 15-minute, we had buying pretty much all day today, institutional buying. Now, is that covering? I don't know. Take a look at the volume. No, it's low volume. So, no, I didn't mean no, it wasn't institutional. I still don't know. I'd have to look at something else. What else do I have? I keeping my eye on the following stocks. ADMA, I'm keeping my eye on that. And ZTO, also keeping my eye on. You can see we had this peekaboo break, and I'm watching it to see if we get back up there. It used to have really good technicals. Let's see. Finally, gold. Since we are in gold, I see a break of previous resistance. I see a retrace, could come lower. As long as we bounce around this level, it's fine. I think over the next 2 weeks, the market's going to remain even more headline driven. I think if you do anything, and if you're an active trader, you need to be very cognizant of the Fed speaking schedule. Okay. That's going to be a big deal because that's what moved the market today, even though it's quad witching. Finally, Wednesdays after my live session, I will be opening it up to really for now, anyone who would like to stop in. It'll be a separate link. I'll be doing some day trading, maybe some teaching. So that'll be on Wednesdays. And let's see. I think that's about it. I think after April 2nd, we're going to have clarity on tariffs. Actually, I think these next couple of weeks we'll have clarity as countries get closer and closer, whether or not they're going to respond with their own reciprocals. And how that all goes. So I think at the same time, we're going to, supposedly I read that the Republicans, at least in the House, are planning to start making some legislative moves to stop or to battle some of the judicial activism that's going on. That's my opinion. And so we may see some clarity on that too, meaning if they try that and they fail, then the judicial activism will rise and the Doge cuts become even less likely to become permanent, right? Or if the Republicans find a spine and they are able to actually codify some of these cuts into law, okay? Because remember, none of these are in law. So they can very well, this big pile of dog shit that they're uncovering they can pile right back up very easily if this is not codified into law. So we need to, if the Republicans would be successful in doing that, it might make the market rally, quite frankly, based upon the fact that the Doge cuts could really happen and could really affect our economy. And so I don't think anybody can really, if they're being honest, I don't think there's any way to truly measure the effect of two things. If Trump gains the narrative again and business optimism picks up, and number two, okay, if he's able to convince the bond market and those cuts become permanent, I don't think there's any way to measure how quickly sovereign interest rate of the United States will drop, because you will be able to refinance debt with a improving fiscal picture, which means you'll be able to have a better position of negotiation on interest rates. So it should result in lower rates. Additionally, as you refinance, the frequency of refinancing will start to go down, because instead of refinancing for 1 year or 3 months, like that idiot Yellen did, we're going to refinance 10 years, 20 years. Okay. And that's the goal, is to lock in these lower rates on a long-term basis. I don't think there's a way, I mean, you can model it, but some of what's could occur on both the upside and the downside is what I like to refer to as animal spirits, right? Where the market really gets excited or really gets depressed. So I can tell you that, as much as I hate saying this, here we are close to the end of the first quarter, I still don't have visibility. I still look and I don't know how to position, meaning this, we don't have a market right now that's able to trend. Okay. If I look at the S&P 500, right, we're back in choppity chop. We need to break out of here, up here or down here. Just get it over with. Okay. And I think that once we do that, I think the result of or the cause of that happening here is going to be the result of having clarity on tariffs. Okay. That's got to happen. So apologies, because I think we're in for more of the same here for at least the next 2 weeks. But the good news is there is a time, but God help us if he comes out and he freaking extends the date, even a week, even 2 days. God help us. The market will rally initially and then it will probably fall. So let's get through these 2 weeks, see what we need to happen. Understand here in the market that we have the market under major numerical levels, NQ under 20,000 and the S&P SPX under 5,700. We have major technical resistance above both of the indexes. We have the leaders in the Qs, which were the leaders in the market, the MAG 7 lagging. So right now, against that backdrop, if I'm a betting man, this market wants to go lower. So I continue to look for opportunities to either for breakouts lower or reversals, while at the same time sort of having one foot on the alternative door, right, to the upside. So always feel free to ask me any questions you may have. I hope you have a great, fantastic weekend, and I will see everyone in the room, on Monday.